Welcome to Balance of Economy. Before we dive into the data, please note that this is market research for educational and informational purposes only and does not constitute financial advice or a recommendation to buy or sell any asset. Let's look at the numbers.
All right, let's get right into it. We've all been watching it happen over the last 5 weeks, right? The Dow, the Nasdaq, both dipping into correction territory. The S&P 500 has been down as much as 9%. And when you see your own portfolio take a hit like that, you probably feel that little pit in your stomach. So the million-dollar question is, what do? Do you hit the sell button? And listen, that anxiety you're feeling, it's not just you. It's real, and it's measurable. Just look at CNN's Fear and Greed Index. Right now, it's sitting at a measly 13. That's not just fear, that's extreme fear. To give you some perspective, 6 of the 7 indicators on that index are screaming extreme fear. A level of panic so rare it's only happened on about 3.4% of trading days since 2011. So yeah, to say the market is spooked is a bit of an understatement.
So how do the pros actually put a number on this feeling of, well, anxiety? That's where our main tool comes in. It's called the VIX, but you've probably heard it called Wall Street's Fear Index.
Now, here's a super important point. The VIX doesn't tell you if the market's going to go up or down. Nope. What it does measure is the speed of the swings. Think of it this way. It's not a weather forecast predicting rain or sun. It's more like a seismograph, measuring how much the ground is expected to shake over the next 30 days. So how does this thing actually work? It's simpler than you might think. Imagine investors are getting worried, right? They start buying what's basically insurance for their stocks. These are called options. And just like when a hurricane is coming and everyone rushes to buy flood insurance, the price goes way up. The VIX just tracks the price of that stock market insurance. So more fear, more expensive insurance, and a higher VIX. Simple as that. Okay, so this gives you a pretty simple breakdown. Anything under 20, the market's pretty chill. You get over 30, and yeah, that's full-on panic mode. And where are we right now? We're kind of in that middle stress zone, sitting around 24, 25. So things are definitely on edge, but it's not a total meltdown.
Okay, now this is where it gets really, really interesting. Because our gut, our instinct, tells us to run away from fear. But what if I told you that decades of data say that for investors, these moments of pure anxiety have actually been, well, fantastic opportunities? Let's look at what the history books show us. So some smart folks over at Creative Planning did this amazing study. They looked at market data all the way back to 1990, and what they did was they pulled out only the moments of highest fear. We're talking the top 10% of VIX readings, so a score over 28.3. Then they asked a simple question. How did the market perform after these freakouts compared to all the other, more normal times?
And the answer is, honestly, it's pretty stunning. Look at this. Historically, when fear was at its absolute peak, the market actually performed twice as well in the following year. We're talking an average return of a whopping 22% for the S&P 500. Compare that to the 11% average for all the other times. The numbers don't lie. Maximum fear has consistently pointed to maximum opportunity.
Okay, so that brings us back to today. Why is everyone so nervous right now, in April 2026? What's actually driving all this anxiety?
Well, it's really a perfect storm, a whole cocktail of worries. First, you've got this massive energy supply shock with the Strait of Hormuz closing down. That's a huge deal. We're talking 20% of the world's daily oil supply just gone. That, of course, is making everyone freak out about inflation sticking around, which then makes everyone wonder what the heck the Federal Reserve's going to do. And to make it even spicier, there's a leadership change happening at the Fed. Oh, and yeah, on top of all that, the AI stocks that have been on fire are finally hitting a wall and pulling back.
Okay, so we know high fear has led to high returns in the past. And we know exactly why there's so much fear today. So what's the smart play here? What should you be thinking about when it feels like everyone else is hitting the panic button?
Here's the key thing to remember. Panic doesn't discriminate. It's a blunt instrument. When people are rushing for the exits, they're not carefully deciding what to sell. They sell everything. They throw the good out with the bad. And that creates these incredible moments, these price dislocations where you can scoop up amazing, high-quality companies for way less than they're actually worth.
And this isn't some abstract theory. You can see it playing out right now. Just take a look. You've got Apple reporting 16% growth, basically printing money. Microsoft up 17%. Their cloud business is just crushing it. Even a solid, steady company like Johnson & Johnson grew sales by over 9%. I mean, these are rock-solid, growing businesses. But because of this market-wide freakout, their stock prices are getting hammered along with everything else. For anyone with a bit of patience, that can spell bargain.
And really, it all just boils down to that timeless piece of wisdom from Warren Buffett. All the data we just looked at, it's just the math that proves he was right. So while every bone in your body might be screaming retreat when there's panic in the air, history shows us over and over again that's often the absolute best time to be patient and look for opportunities. The key takeaway: volatility isn't just the price of admission to the market, it's a signal that profits may be there for the taking. Thank you for listening to this market briefing from Balance of Economy. Our goal is to provide the signal within the noise through deep research and AI synthesis. If you found value in this analysis, subscribe and hit the notification bell. Stay sharp and stay informed.